I'm Craig Lee.
I'm Robb McGee.
And this is Real Talk with Robb and Craig on Thursday, December 3rd, 2020. And today, Mr. McGee, we are talking about...
We're talking about what the mortgage industry is going through right now. Broad stroke ideas that are affecting the entire economy and the entire country.
This is our second take on this because I wanted to show... Actually, this is Robb's Harley mug.
Yeah.
But it's hot chocolate, and the marshmallows are so delicious, but they got stuck in my mustache. So this is take number 2. Not that anybody cares about that. But
We had a cocoa mishap.
Yeah.
Yeah.
So in November, our second wave of COVID-19 cases hit across America. Anywhere, I mean, just from one end to the other.
Coast to coast.
We're all from Missouri, and my 77-year-old father got it. Brenda Kelly and her mother got it here in Washington. So it's all hitting close to home, and it's just horrible. And so everybody that we know personally is going to be on our prayer list, and we're sure that the majority of them will be better than ever.
Yeah. The number of people still unemployed as a direct result of the COVID-19 shutdown and the impact it's had on the economy stands at 9 million people. That's a huge number. It's kind of disappointing that it's still that high. However, it's worth noting that that is a reduction of about half of what it started when we were back in March and April of 2020. We lost a grand total of about 20 million jobs due to the initial COVID shutdown. So we've regained about half of those numbers. It's still very high and definitely affecting the economy.
You do number 3.
Here's what's up. All major economic indicators are up. GDP data is up. Housing data is way up. Manufacturing data is up. Retail sales data is up. A lot of it happening online now, but as stores have reopened, that data is up. Employment data is up. We just talked about how we've regained half of the COVID losses from March, April. And the stock markets are up. They've set record highs for both the NASDAQ and the New York Stock Exchange just in the recent weeks, even with the second wave here. Most of the unemployment continues to be concentrated in the hospitality and travel sectors. Workers such as in hotels, restaurants, bars, airlines, they're disproportionately affected by the COVID shutdown, which I think everybody knows.
You do number 4.
Here is how recoveries typically take shape. They shape up asymmetrically. What that means is some sectors disproportionately benefit from something like this, like housing.
Yeah.
We continue to see record low interest rates, long past when all the gurus who were prognosticating in the beginning of this disaster, they had an idea of how long it would last. It's continuing to go on. The Federal Reserve is saying that they're going to keep the buy rate low at 0, which is what it is right now. They have no immediate plans to raise it. So rates are low. They have stayed low. We expect them to stay low. They're going to start a gradual increase because they can't stay this low forever. They just can't. But they have remained low, and that has disproportionately helped housing, mortgage, real estate, building, all of those industries that are affected by that.
It's shown that it's a strong recovery for the U.S. The U.S. GDP increased 33.1% in the third quarter. Which
That's a
is
huge increase. Yeah.
The labor market continued to recover, adding 638,000 new jobs in America in October.
Month of October, yeah. Unemployment rate that fell from fell to 6.9%, down from its high of 7.9%. 6.9 is still a high unemployment rate. Prior to the pandemic, we were in the 3s to 4s, and so we're still definitely affected, but it's a lot better. It hit almost 8% for a time there, and it's recovered nicely. So,
U.S. inflation is running at 1.2%, and as we're going through and giving you statistics and just numbers about everything, we will get to how this affects us, and I think that's really where this is all going. We want to know, how is this all going to affect us? What's 2021 look like? What is our opinion for what it's worth? But there's a lot of good things are coming, and one of them is you.
The new conforming loan limits were announced for 2021, starting in January, and it's a big jump. the conforming loan limit is going from $510,400 up to $548,200. So that's a substantial bump in conforming loan limit. What does that mean to you? If you are looking to purchase a home and your loan amount, not purchase price, your loan amount after your down payment was going to be over $510,000, that pushed you to what's called a high balance product, which is a higher interest rate, oftentimes requires a larger down payment, has different underwriting guidelines. Now you can go all the way up to $548,000, $38,000 increase, and you're still conforming, not high balance. And that can make that
Huge
purchase
difference.
point a lot better for you.
Yeah.
Yeah.
So all existing home sales continue to rise in November. Now at an annualized pace of 6,850,000 homes. That's the fastest pace since 2005. So a lot of the people that are screaming out that, we're kind of going through what we went through, I don't think we're going to go through that again, because we haven't just opened the floods to, if you can breathe, you can get a loan. And the 228s are gone, the 80/20s, all that stuff. They shouldn't come back either, in my opinion. But we are loosening up on some of the guidelines, which is nice. And if you're a VA and you're in a high balance loan now, you can do an IRL come first of the year and get out of that. That'll help.
That's a really good point.
If
you bought last year or the year before and your loan amount was over that $510,000 mark, your pricing was based on a high balance loan. If your loan balance now is under that $548,000 mark, we could refinance you into conforming pricing, which is substantially improved. So,
you do the wrap up.
Okay, so to put all this data into perspective, in May 2020, just 6 months ago, and during the height of the COVID-19 outbreak, homes were selling at an annualized rate of $3,910,000 annually. Like the recovery, home sales are also asymmetric. That means the suburbs benefit more than the big cities for this particular analogy. Millennial renters continue to vacate urban apartments to buy homes in the suburbs. The trend is nationwide. It's affecting all states, all metropolitan areas in general, all metro areas, which as much of their population leaves the city, they're flocking to the suburbs, and what are they doing? They're buying homes, and that's affecting that buy rate. That's why we see it went from 3.9 million to 6.8 million. That's a huge increase.
So what does this mean for all of us? Rates will continue to stay low, which is what Rob said earlier, at least for a while, and then we'll see them go up.
Not forever.
Rates will go up way faster than they've come down. The housing market should stay strong for both purchase and refinance loans. And some fun stuff.
Oh, real quick though, I want to say, I said this to a customer the other day, and after I said it, I thought, that sounded brilliant. I'm brilliant. So I'm going to share it with you. Craig was talking about rates dropping slowly. I said, rates come down with a parachute. They go up with a rocket. So they go up fast, they come down slow. That's fantastic.
That is fantastic.
We're doing something fun coming up. For how many years now is this?
4, isn't
4
it?
years.
4.
We bell ring for the Salvation Army. We're doing it this year at the Fred Meyer in Port Orchard, the big one-stop Fred Meyer in Port Orchard. We're going to be there when?
It's this Tuesday from 5 to 7, and it's for my motorcycle chapter, the Ambassadors for Christ, out of Kitsap County, Washington. Please come by and see us. Pick up a what are the things we give out?
Candy canes.
Candy canes.
Yeah, but we give out the good ones.
So,
like we have Jolly Rancher candy canes and the
you name it. If they have
Pixie
it, we buy
Stick
it.
candy canes. Oh yeah,
it's all kinds of great stuff. We'll be playing music. We'll be dancing. We sing a lot of Elvis, and we're really good at it.
Some Salvation Army folks, they ring the little dingy bell.
Not us.
We ring cowbells. And Craig has his motorcycle there. He turns on the radio. We're grooving. So please come by and say hi to us. Drop a dime into the Salvation Army bucket. We'll give you a candy cane and say hi. It'd be great to see everybody. Also, please reach out to someone today. You can help even if you're just helping them put a smile on their face. Keep things positive. A lot of people are struggling and dealing with some of the ramifications of this. So be kind to people. Give people a little bit of patience and grace.
Please go to www.realtalk.mortgage. It'll take you right to our YouTube channel. Like and share it. Please subscribe to our YouTube channel as well, and Facebook, of course. I'm Craig Lee.
I'm Robb McGee.
And this is Real Talk.